Welcome to Finance Frontier. We're broadcasting today from the stunning Seaport district in Boston, right here at the luxurious Seaport Hotel with its breathtaking sea views. This vibrant area is a hub of innovation and finance, making it the perfect backdrop for our discussion.
That's right. As we look out over the bustling harbor and skyline, it's easy to see why Boston's Seaport district is known for its cutting-edge technology and thriving financial sector. This dynamic environment inspires today's episode, titled Exploring Finance Innovations from Boston's Innovative Seaport District. We've got a lot of exciting content lined up for you.
In this episode, we'll cover some major headlines in the world of finance. We'll discuss the latest trends in the tech sector, developments in the cryptocurrency market, and insights from recent corporate earnings reports.
We'll dive into global economic indicators, examine sustainable finance initiatives, and discuss significant regulatory changes affecting the financial industry. Plus, we'll share some investment strategies and business ideas tailored for today's market.
If you find our discussions valuable, please subscribe to Finance Frontier on Apple Podcasts or Spotify to stay updated with our latest episodes. And don't forget to share our podcast with friends and colleagues.
So sit back, relax, and enjoy the view from Boston's beautiful Seaport district as we explore the latest in finance and investment strategies. Let's get started.
Welcome to Chapter 1, Top Finance News. Today, we're covering some significant events that have recently made headlines in the finance sector. From major financial shifts to important corporate earnings, we've got a lot to discuss.
Let's start with the tech sector's volatility. Major tech stocks have seen significant gains and losses, influenced by global chip shortages and supply chain issues. This volatility is reshaping investment strategies for many. Max, how should investors navigate this?
Investors need to be agile and informed to navigate the tech sector's volatility effectively. Monitoring global supply chain developments and staying updated on company-specific news can provide valuable insights for making informed decisions. It's also important to diversify investments to mitigate risks associated with sector-specific volatility.
Moving on to the cryptocurrency market, recent developments in Bitcoin and Ethereum, along with new regulations and government actions, are impacting market dynamics significantly. Max, what are the key takeaways for investors?
The cryptocurrency market is experiencing rapid growth and regulatory challenges. Staying informed about these developments is crucial for investors looking to capitalize on this market. Understanding the implications of new regulations can help investors navigate potential risks and opportunities.
Recent earnings reports from major companies like Apple, Amazon, and Tesla have provided valuable insights into market conditions. Let's highlight some key points from these reports.
These earnings reports reflect broader economic trends and investor sentiment. Understanding these can help in making informed investment decisions. For example, strong earnings from tech giants can signal overall market strength, while mixed results may indicate underlying challenges.
Global economic indicators, such as recent GDP growth rates for major economies like the US, China, and the EU, are critical in understanding market dynamics. Max, how do these indicators influence investment strategies?
Global economic indicators provide valuable insights into the health and direction of the global economy. For instance, higher GDP growth rates can indicate economic strength and potential investment opportunities, while lower rates may signal caution. Trends in global trade also play a significant role in shaping financial markets.
Inflation trends and consumer sentiment are also vital indicators of economic health. The latest data on inflation rates and consumer sentiment reveal important trends. Max, how do these factors impact the markets?
Inflation trends and consumer sentiment directly affect spending patterns and investment strategies. For instance, higher inflation can lead to increased interest rates, impacting borrowing costs and spending. Lower consumer sentiment typically leads to reduced consumer spending, which can slow economic growth.
Sustainable finance developments are reshaping investment strategies. New initiatives and investments in green energy and sustainable finance are gaining traction. Max, what are the implications for investors?
Sustainable finance is becoming increasingly important as investors prioritize environmental, social, and governance (ESG) criteria. Investing in sustainable initiatives not only supports environmental goals but can also offer long-term financial returns. Understanding these trends can guide better investment decisions.
That wraps up our top finance news. Stay connected with us for more updates. Now let's move on to our next segment.
Welcome to Chapter 2, Major Developments. Today, we'll discuss some significant trends and shifts that are shaping the financial landscape.
First up, let's talk about trends in oil prices. Recently, oil prices have experienced fluctuations due to various factors, including geopolitical tensions and changes in supply and demand. Max, how do these trends impact the global economy?
Fluctuations in oil prices can have widespread implications for the global economy. Rising prices can increase costs for businesses and consumers, leading to inflationary pressures. Conversely, falling prices can reduce costs and boost economic activity. For example, higher oil prices can impact transportation and manufacturing costs, while lower prices can benefit consumer spending. This balance between supply and demand is crucial for economic stability.
Another major development is Goldman Sachs' challenge to the Federal Reserve's capital requirements. This move could have far-reaching implications for the banking sector and financial regulation. Max, what are your thoughts on this?
Goldman Sachs' challenge to the Federal Reserve's capital requirements reflects broader debates about financial regulation and stability. If successful, it could lead to changes in how banks manage their capital and risk. This could impact lending practices, financial stability, and the overall regulatory landscape. Such a shift might encourage other financial institutions to push for similar adjustments, potentially leading to a more flexible regulatory environment.
The U.S. government is also considering new regulations on digital currencies to address concerns about fraud, money laundering, and market stability. Max, how might these regulations impact the digital currency market?
New regulations on digital currencies could significantly impact the market by increasing oversight and reducing risks associated with fraud and money laundering. While this may create short-term volatility, it could ultimately lead to a more stable and secure market environment. These regulations could also influence how financial institutions and investors approach digital currencies, potentially leading to broader acceptance and integration into the mainstream financial system.
That wraps up our major developments. Stay connected with us on social media for more updates on these and other important topics. Now let's move on to our next segment.
Welcome to Chapter 3, Trading, Investment, and Making Money with AI. In this segment, we'll explore how AI is transforming trading and investment strategies and how you can leverage these advancements to make money.
One company at the forefront of the decentralized finance revolution is DeFi Technologies Incorporated. They provide innovative financial services and products centered around digital assets. Max, can you tell us more about their key partnerships and financial performance?
DeFi Technologies Incorporated is making significant strides in the DeFi space. Their key partnerships with major blockchain networks and financial institutions enhance their service offerings and credibility. Financially, they've shown strong growth in revenue and user adoption, indicating a bright future for the company. These partnerships help DeFi Technologies expand their reach and influence in the financial sector, making them a company to watch.
Another important trend is the rotation from mega-cap to small-cap stocks. This shift presents lucrative opportunities for investors. Max, how can AI help identify these opportunities?
AI can play a crucial role in identifying investment opportunities by analyzing large datasets to uncover patterns and trends that human analysts might miss. For example, AI algorithms can monitor market conditions, company performance, and investor sentiment to pinpoint small-cap stocks with high growth potential. Utilizing AI tools can give investors an edge in making informed decisions and identifying promising investments that might otherwise be overlooked.
That's it for this segment on trading, investment, and making money with AI. Make sure to subscribe to our podcast for more updates and insights. Now let's move on to our next segment.
Chapter 4, Finance Series. Welcome to Chapter 4, Finance Series. Today, We're focusing on infrastructure investments and their role in long-term economic growth and stability.
Infrastructure investments, including green infrastructure, offer stability and long-term returns, making them an attractive option for many investors. Max, can you explain the benefits and recent developments in this area?
Infrastructure investments are crucial for economic development as they provide essential services and support economic activities. Green infrastructure, in particular, offers environmental benefits by promoting sustainability. Recent developments include government initiatives to fund infrastructure projects and private investments in renewable energy and smart city technologies. These investments not only generate returns but also contribute to sustainable development. Additionally, investing in infrastructure can create jobs and boost economic growth, making it a win-win for investors and society.
That wraps up our finance series. For more in-depth discussions, make sure to subscribe to our podcast. Now let's move on to our next segment.
Welcome to our Business Idea segment. Today, we're discussing an AI-enhanced remote work platform. This innovative platform integrates advanced AI technologies to improve productivity and collaboration for remote teams.
Despite the challenges, the benefits of implementing such a platform are substantial, offering significant improvements in remote work efficiency. Max, can you elaborate on the financial concept behind this idea?
The financial concept behind an AI-enhanced remote work platform revolves around increasing productivity and reducing operational costs. By leveraging AI for task management, communication, and performance tracking, businesses can optimize their workflows and enhance employee collaboration. This leads to higher efficiency and cost savings, making it a financially sound investment. Moreover, the scalability of such a platform can provide long-term value for businesses as remote work continues to grow.
For more innovative business ideas and insights, make sure to subscribe to our podcast. Now let's move on to our next segment.
Thank you for joining us in this episode. To stay updated with our latest content, make sure to subscribe to Finance Frontier on Apple Podcasts or Spotify.
Help us climb the charts by leaving a review on your favorite podcast platform. Your feedback means a lot to us.
Follow us on Twitter for live updates and additional insights. Join the conversation and let us know your thoughts on the topics we discuss.
Don't forget to share our podcast with your friends, colleagues, and anyone who might benefit from these discussions. Your support helps us reach more listeners.
The information provided in this podcast is for educational and informational purposes only and should not be considered as financial or investment advice. Always consult with a qualified financial advisor before making any investment decisions.
We want to acknowledge and thank all our sources for their valuable insights and contributions, including Reuters, CNBC, Forbes, The New York Times, and all other reference sources.
Copyright 2024 FinanceFrontier.com. All rights reserved.